I just want to test and see if anybody is brave enough to try and respond to this question. And we'll do it in a different way now. Instead of in the chat box, I'd like you to try, if you don't mind, to raise your hand so we'll have a discussion. At the bottom of the participants. So if you click on participants, it will open and show you whoever is in the room. And then at the bottom, somewhere in the middle there, there's a button that says raise hand. In case you're not familiar, I always do that when we're in a Zoom session. That's what will allow you to respond. So the question on the screen, how do I am an entrepreneur. I own a business. How do I make money from my business? And this is not a trick question. This is actually the key to the discussion we're going to have here. So anyone want to give it a try? How do you're encouraging me. I know many of you have spoken to your friends and told them business is the way to go. Good, I'm one of your friends. I'd like someone to try and tell us, how do Waithaka, I own this business. How do I make money from that business? Anyone want to give it a try? That interaction is useful, and it will begin to build our thinking through this. So if, it's great. We're being joined by quite a few people. I'm really excited by this. Thank you so much, Ruby, for organizing the session. But I'm wondering if I'm alone in this room with 94 other people. This is always quite interesting. Who wants to? Willie, I see your microphone on. Does that mean you want to try? That is Willie Mutisia. Okay, no, your microphone is on because you didn't notice it was. Come on, someone give it a try before I call you out. You see, we're here to learn. So we need somebody who's I like interesting names. Basil, I hope I'm saying it correctly. Basil Hero. Switch on your mic and we have a chat. How do I make money, guys? You want to be in business.
Hi.
Hi, how are you doing?
Well,
please, who's now speaking? Who's speaking?
This is Basil.
Good, very good. Basil, how are you doing? Excellent. How do I make money?
Good, thank you. Well, different ways to make money from my business. I can make money by keeping costs at a bare minimum.
Okay, by not paying money. Low. I don't understand. Basil.
Pardon?
By reducing cost. If I have no cost, I don't start the business. How do I make money?
Well, I'm assuming we have a business that is running already.
Good.
Yes.
Huh?
Yes. So
what happens if I keep costs low? What happens?
If we keep costs low, we mean that we are more liquid. Of course, the lower the cost, the higher the revenue, the higher the profit. Sorry.
Okay. To increase profits.
Yes.
And if I increase profits, what happens? So how do I make money?
If I increase profit, my capital increases as well.
That's true. So the value of the business is growing, but how do I make money?
You're making money already.
How? Mercy, give it a try. Go ahead, Mercy. Thanks so much, Basil. That was great. Thank you. That's a brave man to have started.
Hi.
You
hold on,
keep costs low, you increase your profit, and reinvest. Yeah?
Excellent.
In the business Basil, to make more money.
I've got you, Basil. Now I want to hear from Mercy. Hi, Mercy.
Hi.
How are you doing?
I'm fine. Now, for me as an individual to make money from my.
Oops, sorry. Just unmute. For you to make money, go ahead.
Okay, for me to make money from my business.
Yes.
One, we must be separate things. Yes, it is my business, but we have to be separate.
Okay.
So the money that I make from it is it comes in form of a salary.
Okay. 1. How else do I make money? Thanks.
Yeah, then the other thing with the profits, there's a verse I read. I think it's in Leviticus.
Oh no, okay. Now we're going
Yes.
to the Bible.
Yes. When starting off,
yes.
the Israelites were being told that when you get into the land that I'm going to give you, I think it's Leviticus 19 or 29. Something
I'm even there on which one? I'm there.
Leviticus. Let me also now look at my Bible.
We have to keep each other honest in these things. You know, people quote Bible verses that don't exist. You know, those random ones, like God helps those who help themselves.
No,
I looked for that verse.
It's Leviticus 19 from 23.
Verse 23. When you enter the land and plant any kind of fruit tree, regard the fruit as forbidden. For 3 years, you're to consider it forbidden. It must not be eaten. In the 4th year, all its fruit will be holy and offering praise to the Lord. But in the 5th year, you may eat its fruit. In this way, your harvest will
Yeah, so for me, the revelation I got from it is that for the first 3 years, you plow back whatever you are earning in form of profit. Then in the 4th year, you can now do the Thanksgiving. Then in the 5th year, when you're now told to eat of it, it means that the business can now talk of creating branches, growing other branches. Yes.
So how do I make money? You have not told me.
You make, if it is buying and selling, you make by selling. And as an individual, you earn a salary.
So that's it. The only way I make money is through a salary. Okay. Thank you so much. I appreciate that, Mercy. Well done. I'm seeing Sharon with her hand up. Hi, Sharon. How you doing? Give it a try.
Hi, Waithaka.
How's it going?
Very, very, very well. So my thoughts are,
yes,
in order for you to make money in your business, for me, very important for me as a business owner to have a proper structure, and this structure will enable me, my proper business model will enable me to minimize loss and to also have a formula for scaling up so that when money starts coming in, there's a proper structure, so I'll avoid any kind of loss. So in turn, I'll make.
Good. The structure is in place. It is working. How do I make money? Other than a salary. Salary I've agreed so far. We're going to talk about that. Other than a salary, how do I, the entrepreneur, make money?
Oh, as an entrepreneur, you can make money. Okay, other than the salary, I can do some, I don't know if it will make sense, but I can do some consultancy work on the side to help people build a business.
No, from my business. Not another business. That you are now starting a different business. Me, I'm talking about mine. How do I make money?
Okay, I don't know. I'll just wait.
Mercy, were you the one who was speaking earlier? No. Go ahead, Mercy. Nyanchama. Hi, Mercy. Go ahead. Thanks, Sharon.
Myself. Can you hear me?
I can hear you now, loud and clear.
I think there are 3 ways.
Good. Let's go for it. We have one. How many more?
You have the salary. Then you calculate your profits. You calculate your profits at the end of the year, and you can choose to make a capital investment back into the business or pay off dividends to the shareholders.
Oh, praise the Lord.
That's one. Another way is that you can increase the value of your business.
I hope I've done it.
The other way you can do is by increasing the value of your business, and then you can choose to sell off part of your shares, or you can sell the business overall.
Sell a part Or the whole?
You can increase, like for example, let's say your business, you sell tomatoes and you sell certain vegetables, right?
Yep.
Then you decide, if I was to sell shares right now, I will not own or sell the business. So you can even buy off a running business right now, or it's your business that you have grown. Ooh. And then you increase its value either by increasing services or increasing equipment. Then you can sell off shareholding, your shares, for money.
Hold on. Not just necessarily capital investments, Mercy.
Yes.
You can build brand. Even the brand itself has value.
Yes.
So that
even
you don't even have to. You're increasing your revenue. You're increasing the potential for the business. What you're doing is increasing the value of that business, even though there's no capital investment there. Once you increase the value of the business, now we are talking. Go ahead.
Yes. So you have two ways. You can either decide you want to sell off shareholding, or you can sell the business itself and then go build another one.
Very good. Please, thank you. Note this: dividends, and we'll talk about it shortly, is not profit. And thank you for bringing that up in your discussion. I really appreciate that, Mercy. And this, now that we have some kind of definition, I want to give some illustration, hopefully that will help us. But then I'm going to challenge the philosophy of our business and how we think about it, and why sometimes we find it very difficult and struggle to get this money that we're talking about here. I completely agree with you, Mercy, that there are three ways, in my opinion, and unless someone else wants to tell me how they do it. How do I make money from my business? Number one is that if I work in that business, I should earn a salary. If I'm part of the value chain, definitely I need to benefit from it, and the benefit is financial. The second way is, as you heard, a portion of the profit at the point at which there is a profit at the end of the year. And that part of the profit, which is agreed upon by directors of the company, if you're the only director, that's okay. You can agree with yourself and decide to pay. That becomes part of what your money is. That's cash to you. And number three, I said, how do I make money? Number three is to share equity with others. And as they come in, because I have built that value, whether I share the entire equity or a portion of the equity, that's where the money is. That is how that money is made. And that's where the huge difference is. When you think about it, let's look at a local example. Why has the name left? But I'm sure one of you knows. Type in the chat box if you remember his name. He's one of the most famous shareholders at Java House, Nairobi Java House. For those who are Kenyans, you'll be familiar with this, and I'll give a more international option to that. If you don't mind, do you remember, anyone remember his name? I'm just looking at the chat box to see if I can get there. Good. I love the by selling products. You guys are funny. Attracting customers. Yes, for sure. That's how the business makes money. But I was asking how you make money. I'm just catching up on some of the comments. It's hard to keep up. Yes. Make money by standing out, etc. Does anyone remember what was his name? The main
Mzungu. He was Mzungu. He was Mzungu, then he sold it to a Somali or somebody.
Yes, you see how Kenyans Kevin Ashley, thank you, Rachel. I knew someone would Google it fast enough. I really appreciate it. So on the first, when the first investors came, and nobody knows what that initial investment was into the company, all the other shareholders, they were the first few shareholders that he started at the company with. They pretty much bowed out. They cashed in at that point. So as a group of shareholders, they built the brand of Nairobi Java House to a point at which an investor looked and said, hey, this is a great brand. The business is sound. The structures are sound. What we want to do is to plow in some money. And when we do plow in some money, we want the business to grow to a certain level, and then we exit. Often that is what venture capital does. When we hear about venture capital or private equity, many times these companies and these institutions are trying to put in money into a business for a period of time and then to cash out later as the value in the business has been grown through part of their investment. So that's what they did this time around. So they bought out a majority of the other shareholders. Ashley was left with only 10% of that business, but he was left also with 10%, but also he was left in the management because they wanted him to continue that same growth just with the money that was being pumped in. A couple of years ago now, actually it's 2 years, I think, we had one of the gentlemen, a gentleman called Leonard Mudachi. He was part of the management team that was actually involved in the expansion of Java. For those who remember many years ago, before Java was everywhere, they were in certain very key positions around the city of Nairobi, not many. But when the venture capital hit the business, their mandate was grow. In fact, they had money. And Leonard, when he came to speak at one of our events that we had for entrepreneurs, and that's one of the things that we do in the entrepreneurship program, is that we don't it's not a theory class, okay? I hope you have understood. Even right now, we're not talking theory. I'm trying to give you real life examples so that we can work. So he was saying, in one of these mentorship sessions that we're doing, he was explaining that they had more money than resources. And he was saying they were frustrated because his mandate was to open out an outlet every month for 2 years. Every month for 2 years. And so they were frustrated because they were asking, what's the problem? Is it money? We have the money. You want some more money? And he was trying to explain, no, it takes 3 months to open up an outlet. We have to train guys. We have to bring guys from this place. We have to do this. We have to import things. And so they had to slow down the outlet. But they wanted to expand within 2 years, open up those number of outlets, and then sell to somebody who might be interested in that thing. That's the speed of venture capital. But here's the thing. When the capital now arrived, we don't know how much Ashley made from the sale of his shares, but he was left with only 10%. Fast forward, they have expanded. They've gone all around Kenya. They're everywhere. Now, all outlets of Java, that's Nairobi Java House, 360 Degrees, Pizza, is it? Yeah. And Planet Yogurt. So they're all over the place. The venture capital is happy. Then Uganda as well. Venture capital is happy. They have said, we have built the value. They looked to the market and said, who wants to own this place? And definitely there was an interested party who looked and said, this is a growing business. They have good revenues. There's likelihood that they're going to continue to grow. They pretty much have a monopoly on this corner of the world. We're not competing with Starbucks and everybody else. So they said, this is a good business. And they were willing to pay 13 billion shillings, 13 billion shillings. You can go and check it out in the Business Daily. And 13 billion shillings they were willing to pay for this business. Remember, Kevin Ashley had how much? 10%. If you remember, that was the headline that I remember reading in the newspaper, as he pockets 1.3 billion shillings from his 10% as he bowed out and moved out of that same space. So that's let me explain. When you hear about entrepreneurs, now becoming multi-billionaires, etc., it is usually at that point in which equity has been shared with other people. That's usually the transfer. Even the massive wealth that you see around the world from other people, it is important to understand where does it come from. Equity in a business is massive. So if you think about it, someone like Jeff Bezos now, who's the wealthiest man in the world, he does not have over 150 billion. Is it 2 billion, almost 200 billion worth he does not have $200 billion in his account. He does not. What he has is he has a stake. He has shares in a company called Amazon, which he started. And if you were to value all his shares together, plus maybe his houses and other things, but mainly his shares, they come up to that between 150 and $200 billion. Now, he doesn't have it in his pocket. He has it in equity. Now that we must begin to understand, and if we understand it, then we can move forward from here. So one more illustration, then we get into the discussion for the day as we move forward. Unless I am seeing, Jacinta, did you want to add, or you're okay? That is Jacinta Django. Hi. I don't like to leave people hanging. I can see your mic is on, but I can't hear anything. So I'm going to move on now. Oh, you're there. Good. Hi. Did you want to add?
Hello.
Hi, go ahead. We can hear you now. Yes, go ahead.
Okay. Thank you. I wanted to add about this, but I think you've explained it better. And I'm really glad. I was not on the right track, but I had that in mind. And thank you.
Good. I'm glad. And that's what we're trying to do here. And so when it comes to business strategy, if we don't start from the very beginning, then we find ourselves in deep trouble. I want to find out from you, even as I'll put up my presentation, just type in the chat box if you don't mind. Why are you in business? Or why are you interested in getting into business? Because I can see a few people who are interested, others are in business. Why? What is the reason? Because we must be clear about what is the ultimate reason. It'll affect the way we work our business. Type quick in the chat box. Why are you in business? Grace, I need to talk to you. This is great. Thank you. Money. I was waiting for that. Money. I'm waiting to see anything other than money. Is there anything other than money? So you like it? Yeah, so maybe there's a passion on that side. But who is this who said I like it? Mercy. You're back again, Mercy. Yanchama, put on your mic. Mercy, what is it that you like about business?
Me?
Yeah.
Okay, first of all, I really like business. I do.
Good. Why?
I do. Okay. First of all, one more thing. Just let me add on to what you were saying previously.
Please go ahead.
One company that's doing that just now is Good Life Pharmacy. If you notice, they're buying off pharmacies, and then they're rebranding them as Good Life. Number one, I like offering solutions.
Okay.
Offering in terms of I've been in business, but I actually just like it. Yeah. And when I started off, I don't come from a business background.
Yeah.
But I started off with, I used to like watching Trump's.
Oh no.
That's where my interest started.
The Apprentice.
And I used to watch The Apprentice when I think either I was in college or I was in high school.
Yeah.
And then I liked it.
Yeah.
And then once I got into business initially, I was scared when I saw the people in my field before.
Yes. Yep.
And I saw the degree of desperation when they are older and trying to undercut younger people. And I said at their age, I would not be that. And that's how I got into business. But I enjoy it. Yeah.
You enjoy it. See, then you just do it for free. Why don't you just
I'm sorry?
do it for free? Since you enjoy it so much, just do it for free.
No, that is just one of the reasons. You asked me what
So what is
that's one? Of course, I also need to survive.
Is it to survive? Just survive? Because if it's survival, then
okay, I'll tell you. Let me pack and tell you why then. Because I was on the road. Number one, I had my children. So I wanted something that would free up my time. With business, you can be able to employ people.
Yes.
And then they do the work, and then it frees up your time.
Now,
Mercy.
Mercy, let me stop you there. Continue driving. You want money. Let's just break it down. Look.
Okay, I also want money, but it's not the only reason.
But the money helps you to pay other people and do all that and take care of your children and do all the money is a core part of it. And yes,
fine,
I'm not trying to steal the other things, but at the base, if not, you can become a monk, join a monastery or whatever and go.
No, but I'm okay. Can I challenge you on that? Huh?
Please.
Can I challenge you on that? Huh?
Please.
There are also some formally employed people who earn crazy money. But the problem with formal employment is that you're under somebody's thumb. So it's not just the money.
I agree. I'm not saying it's not just the money. I'm not saying it's just the money. I'm saying that money is core to even.
Yeah, but I also want money. That's true. I accept.
Very good. Thank you. I want to try one more person as I end this section. Emily or Chanda. Hi. Switch on your mic, Emily. Where is Emily? Hi. Talk to me about this social impact. What are you thinking about? Emily, if you're speaking, I cannot hear you. Okay, no problem, Emily. I can see you're having an audio problem. It's okay. We shall survive as we go forward. Here's the thing, guys. Even if you are starting a non-profit, money still matters. And it's key to all the decisions that you're going to make along the way. Because even if it's a non-for-profit, even if you are there for social impact, the ability to have greater social impact is impacted by the resources that you have. And if you're going to be fundraising in order to do so, you need to have evidence of efficiency. You have to have evidence of a good return, even for those who would be giving, not necessarily for a profit at the end, but for the sake of the impact that you're going to make. So when we talk about money, it is key to it. But I'm here because of you, the entrepreneur. I'm here because I want you to have the best chance to survive. Let's get straight into this now. Let me go ahead. We've talked enough. Now let's get to business. We as a company and business of shifting mindsets so that purposeful people like yourselves can create wealth and live abundantly. And so I am in agreement with everybody who was saying it's not just about the money. For sure, it's not just about the money. 100% I agree with you, because there needs to be some purpose that is holding you. You know of so many people, I'm sure you could name one or two who had immense wealth, but no purpose and no joy in life. And I know when I hear people saying, because I enjoy it, because I love it, because this is something I'm passionate about, I love that too. Good, because it'll tend to keep you stronger in your business and keep you for a longer period of time. So to create wealth means that we want you to be able to manage that money as it comes through. Wealth, and as far as we are concerned, and that's something that we were having a discussion just now, is with Mercy, is the ability, you can write it down so that you'll never forget this. Wealth is the ability to live the lifestyle that you want without having to work. So first of all, you need to describe that lifestyle that you want. Make sure you have it clearly as a target in your mind of where you want to be. And then the actions that you're going to take will help you to get there, whether it's starting a business, whether it is continuing your employment, whatever it is that is building the amount of cash that you need, the assets that you need to live the lifestyle that you want without having to work. So one of the things that has come up in our discussion so far is that people want to start a business so that they are free, in terms of that now you don't have someone telling you what to do. But for those of us who've been in business, know that, let me tell you, if you think having an employer is a tough thing, wait until you start a business. You might be your toughest boss that you have ever seen. So this idea that you have absolute freedom is not, it's a bit of a myth, which we addressed early in the program. And I want us to really think through that. I want us to deeply think about it, because sometimes you might find yourself thinking, oh, if I start a business, freedom just comes. No, there is work. But if you work and you build the business into an asset, if your business is an asset that is generating income for you, then that becomes one of the areas of freedom that you find along the way. So I want us to understand that. Make sure that your business becomes an income earning asset that does not require you. So when you come into the entrepreneurship program, we are trying to work you out of a job. We want you to get to the point that your business runs, whether you show up or not. It has the ability to continue to grow. So that's what you want us to do. So let me just show you something shortly here. I forgot to click on sound and screen. That's what I need to do, isn't it? Good. I want to show you something. Let's just watch this for a second and we'll have a discussion about it. Very good. Does anyone have any idea what is happening on the screen? You can type in the chat box if you have any idea what is happening on the screen. What are we watching? What is happening here? Naomi, it is not rugby. Is that Naomi? It must be Naomi or Yugi. Sally, it is not rugby, football. You're close, Sharon. That's an honest answer. Everything. No, Crystal, sorry, everything. So many. Handball, it is not a handball. It's not Aussie rules. Although it's close, it is a close relative. It's not American football, it is not football. Let me explain something, guys. And this is, ooh, Ronald, you're close, you're close, you're close. It is a relative of Aussie rules, Australian rules, and Gaelic football. And so it's actually a mix of the two. It's called international rules, international rules. In fact, if you saw the very beginning, there was a logo at the start. I was wondering if people would notice that at the very beginning. When it lands, let's see if I can get it there. Can you see? It's called international rules. There you go. And it is so important that we are able to understand and build from there. Excuse me, I was just waiting for my people to arrive home, then I can lock my door. So that's it. And it's not new. I'm hearing Hilda saying it is new. I put this up on the screen because if you came into the business thinking, if you came into this game, thinking you're playing rugby, you'd be in trouble because the ball is different. The passing situation is different. It's tough. If you got into this game thinking that you're playing soccer, you'd be very surprised when the guy next to you tackles you to the ground and you'd be, and without thinking about it. I'm telling you, if you get into the game of business and do not understand how you score, how you win, that is the illustration that I wanted you to get to. Because we get into business on not understanding those. If you noticed, some people were shocked that profit from my business is not my money. That's the business's money. And every time we think about profit as the only way that we're going to make cash, it becomes problematic. When we get into a business, we must understand the rules of business. Does that guarantee you that you're going to win in that business? No. Just like if you play any sport, there is a possibility that you're not going to actually win. And so I want you to just pay attention to this screen for just a few seconds, and we're going to be able to work through on that. So here we go. I want you to just pay attention. I want you to see whether you'll notice how guys are scoring. So you can score by going over, you can score by going under, to the side, and you even get better scores when you go through the goal. But there are many factors in this game, which I hope and I pray that we're going to get as we go along the way. So let's get straight into it now. let's begin to break down some of these thoughts as they come through. Emily is telling me a story. Don't worry, we'll get there. We'll get there. I see your comment there in the chat box. So we're trying to deal with this issue of a salary, dividends, and equity. Oops, I went to the wrong presentation. My apologies. We were in the right place. Here we go. So if we understand an asset, just real quick, these ones are things that you can just quickly go online and find out about them. Any resource owned by an individual or business, tangible or intangible, that is owned or controlled to produce value. And we heard about that as we're going. Positive economic value, that is what you're looking for. You're trying to produce value. Your business becomes an asset when it is producing value. That's what you're trying to get to. And it's an even better asset if you are not even part of it. That you'll find many of the entrepreneurs that you hear about, they don't even work in their businesses. They just own part of it. So what is then a business? A business is the organized effort of individuals to produce and sell for profit the goods and services that satisfy society's needs. A business then, so to sell for profit, okay? And we're going to break down some of these terms as we go. Business then is an organization which seeks to make a profit through individuals working together for common goals. So the aim of most businesses is profit. As you said, maybe there are some businesses that are non-for-profit, but they have different goals. However, the principles of business still function, especially around the area of money, because you're managing that resource to build that value which you're looking for. So real quick, your business should be an asset. Your business is an asset if it produces value for you that can be converted into cash. And the hope is it can become an income earning asset so that you no longer have to work to get the cash. And as we said at the beginning, this is the wealth and financial freedom that we're looking for. So if I own a business or a part of a business and it makes money for me, whether I'm there or not, isn't that great? Isn't that the wealth that we're looking for? And that's a key part. But this is not often the case. Why is that? Income from the business is often irregular for many of us. I think many of us are saying in terms of the timing when it comes in, the amounts. We are not sure. This month, it's not going to be that month. When the business does well that month, you are the wealthiest person. If it's lean times, it is lean times, okay? We are more often pumping money, and I don't know how many people are feeling this as entrepreneurs, that maybe you started a business and the money is coming out of your pocket instead of going into the pocket. You're still pumping in capital rather than the business giving you the return. And we are unsure for how long we should keep trying. That's another thing before we give up and try something else. You know, the truth of the matter is this, and I love Waithaka, who's our founder, and she's one of the lead trainers in the entrepreneurship program. She talks about this. I'm sure you guys have heard that statistic over and over again. I don't know, is it 2/3 of businesses shut down in the first 5 years or something like that? Essentially, that kind of tells people that it's very hard to start a business. And I'm not saying that it's easy. But what that statistic doesn't tell you is how often does the entrepreneur fail? So the example is this. We started a business a while ago and it didn't quite work out. And so we shut it down and we are trying something else now. So that business failed, but I'm on to another business right now. And what we found is that often entrepreneurs, it is their second or third business that really succeeds. And even those who started really well, this is something that I loved. We had Mr. Peter Ndwati of Resolution Health speak at one of our events. And I asked him after the event, tell me a bit about your business thought. And he said, yeah, so this Resolution Health was a hard business to start. It worked well and it's become big. It's my biggest asset. I've started other businesses and not all of them have grown to the size that I want. And even some have failed. So the fact that businesses fail does not mean that the entrepreneur, you the entrepreneur, have failed. The likelihood is you found that maybe this was not the area that you wanted to get into, or maybe there's a different way that you can enter the market. So I hope that you're getting what I'm talking about here. So how do I make money from my business? Now I want to be very clear on this. There are three main ways which we talked about earlier on, and I want you to get this. Number one is my profit. I didn't say profit, I said my profit. Usually this is called a dividend, which is distributed to shareholders at the end of the financial year. It is a portion of the net profit. I think we had that discussion at the beginning of this session where we were being told, yeah, at the beginning of a business, that money should be plowed back in. And that is a normal thing for many businesses, that profit, as the money is earned, the business is actually a going concern, it's making money. You want to plow that money back into the business so that it grows even further and further. What you're doing is building value. However, if you're going to eat profit, but many of us eat profit, the wrong profit in our business, we should do so at the end of the year when we've accounted for all costs. And then a portion of that, as directed by as given by the directors, goes to the shareholders or the entrepreneur like yourself. So it is a portion of the profit, not profit. Profit in business is not your money. Number two, I'm just trying to keep up with some of the comments that are coming through. We'll have a time for Q&A and hopefully to pick up on it. My salary or wage, okay? That if you're involved in the day-to-day production of value through products or services, then you must be compensated for your time through a salary or a wage. What does that mean? Entrepreneurs, think about it this way. If you hired someone to come and do the work that you do in your business, if you hired someone, just like in my case, this is now almost 2 years. Wow, that's amazing. Almost 2 years ago, there's a lady called Washeke Ndwati, who's the founder of this company. She hired me to come and do what she used to do. She was the CEO. Now she has left that position. I am the one now running the business called Centonomy. Now, my question to you, do you think I'm doing this work for free? I don't know how many of you have heard me speak. I don't think that you would expect that to happen. She's paying me. So my question to you is, if you hired someone to do the work that you do in your business, how much would you pay them? When you're beginning to think about a salary, this is what we want you to think about. We want you to think, for the value that I'm creating in this space, this is how much in the market for such a person like me that is required. If you're a technician and you're the one who's actually doing let's say you're a carpenter and you're building these tables or the chairs that are there that we're using, you have a skill for doing the work that you're doing, you need to be paid. That one is easy to get along. But many times we think as a manager, because maybe you're not the one, maybe you have, oh boy, I think you're the one who owns a wonderful salon. Maybe you're not the one doing people's hair, but you're the one managing the end. You're looking for, what is it called? You're looking for supplies. You manage in terms of the money and all those other things. Listen, that work has value. And in fact, I hazard a guess, in most companies and corporates that you have come from, who usually gets paid the most? Is it the teller in the bank who's actually handling the money? Or is it the senior executive who plans strategy? It is that. So I want us to begin to think deeply about it. If you are creating value in your business, then that value needs to be paid for. Let me tell you why in just a short, and I'll come to the questions. If the business cannot afford to pay you what you are worth for the work you are doing, is that business profitable? Question mark. And the final one, before I take a question and then move on, is through the sale of shares or equity in the business. If you sell a part of or the whole business, that money then that you receive is how I make that money. And when you think about like the multi-billionaires, the ones who have so much money, often it is at the point that they sold equity in their business that the cash actually entered their pocket. So Jeff Bezos now was able to buy all his houses. You can think Bezos, Bill Gates, etc. Now, when they cashed out a portion of their ownership, Zuckerberg of Facebook, that cash is now what bought them their houses, their wonderful cars, the yachts they have, the planes they have, etc. That cash is now theirs for them to use. And that is an important distinction. And as I was speaking, I can see that there are a couple of questions that were coming through along the way. Rachel, Mudama, go ahead. Why don't you switch on your mic and ask your question?
Hi, how are you?
I'm fine, thank you.
Yeah, I was asking, in the first instance, I wrote a question about stocks increasing at a very high speed, the dead stock, that is, or the slow moving goods, without a warning. The customers just change their preferences at any one time. And then the second question was, how do I know how much?
What about it? Sorry.
A lot of
what about the
cash
dead stock?
A lot of cash being held in the organization in terms of stock.
Correct.
Affecting my liquidity, and yet I'm not able to predict
the
change in preference.
Rachel, affecting whose liquidity?
The company's liquidity.
Thank you, not yours. Continue.
Yeah. Then the second question is, how do I know how much I should be paying myself from the business?
Good.
Yeah.
So we'll talk a little bit about that second, and I'll give you we'll talk about that. One of the classes that we run in the entrepreneurship program is we do a whole 3-hour session on, working capital. And it is that balance between stock, between debt, and between the credit that you give customers, whether it is as whether you are in product or in service. And we spend quite a significant amount of time talking about that issue of liquidity, because that liquidity gap can be met through debt, especially in a stock case. One of the reasons that you often see companies having sales is because they have stock that they need to get rid of. So you want, as the stock is becoming less meaningful to the society, or to the people who that you're trying to sell to, your customers, then you put it on sale so that you get rid of it, you liquidate as much so that you can be able to rebuild and even leave some space. So those are some of the issues we discuss in the class. As I told you, the session today is about your money, and I will respond on that issue of how much you should pay yourself as we go along. Is that okay?
Mm-hmm.
Did I miss any other question that was there on this so far? Michael, I know you're in the room. If I did, just help me with that.
Yes, Waithaka, there is no question that you've missed.
Okay, I keep going.
Yes.
Good. I was just trying to read through and see if I had.
But now there are questions which have come up.
Yep.
And I think that is what you're going to answer, how they should pay themselves.
Good. Let's go ahead. Let's go ahead.
Yes.
Thank you so much, Mike. So, real quick, I want us to understand. Oh, there's a hand up. Let's go to that real quick. Mercy, go ahead.
I have a question, especially as regards the salary and taxation and profit and taxation. Because if you earn a certain salary, of course it reduces your profits, isn't it? Because let's say you count yourself higher, or if you count yourself less, it's a cost.
I have 31%.
Just hold on, sorry, we have someone else's mic on. Guys, if you're not speaking, kindly just keep your mic on mute. Thank you. Go ahead, Mercy.
All right. So assuming, let's take an estimate, okay? Like if you're to pay yourself 100,000, okay, or the taxation on salary and the taxation on profits, it can actually reduce the amount of money you're to get. You get me? Like you'll be, if you pay me 100K through my salary, let's say you tax 30%, right?
Correct, yes.
But if I reduce my salary and I increase my profits,
yes,
the taxation on profit is less, isn't it?
No.
Or it will still be the same. It's still
Corporate tax is still the same, 30%.
So I don't lose out.
No.
I don't. It's the same.
You will in some way.
Yeah.
But again, in the program, we have an entire session on tax. So what you're talking about is that the benefit of working through a company is that you can cater for costs before taxation. Whereas it is your PAYE, which is your income tax, you are taxed before costs. And that is the major difference.
So I don't think I lose out.
Yes. So on the profit itself, you see, I'm being very clear on the terms we're using. The profit is still taxed at 30%. But before you declare a profit, you can cater for many costs. And it is what is left, that profit at the top is what is taxed. So if your costs have come beforehand, then you can benefit from it before that happens. Okay? All right.
Got it.
Very good. Wendy, ask your question.
No, actually, I just wanted to help you. I think I know where she's coming from because I'm there. I think the worry is you feel that if I pay myself a salary, at the end of the day, I'm taking from the business and then the business will not post a profit. So I think that's the struggle she's having in her mind.
And here's the thing, Wendy. If the business doesn't post a profit, then
forever,
you're finished. Business. Don't be shut the business down, move to something else. Continue.
Yeah, that's exactly what I realized. Because then you have to ask yourself, if I don't have a profit for 3 years and I'm working on that business every day, every week, surely why am I there? You know, you just start getting frustrated and feeling you have no money, and now it just snowballs into you snowball into a bad space because you have no money for fuel, you have no salary, you have nothing to keep you going motivated every month, because you need to be motivated. And you need to feel that business is paying you what you are worth if you worked in a corporate job, for example.
And here is the key. If a business is not profitable and cannot pay its employees, you being employee number one, then why are you in that business? There must be, and this is one of the factors. So I need to move on, otherwise we'll be caught up here. Don't worry, a lot of the questions will be answered as we go along. I just want to mention this. If you don't mind, please. We are going to begin to understand that a business is about generating that profit which we're about to describe. It is about pushing through so that it is beneficial to the shareholders, including you as employee number one. And so if we get that idea in our minds, then we will stop kicking a dead horse. And I honestly believe that there are some businesses that you need to understand this is a dead horse. Stop kicking it. Use that creative energy that you have to build another one. At what point are you going to be able to say that this business worked or it didn't work? And here it's about survival. Please note, I said, how do I, the entrepreneur, make money from my business? And if we are not clear on that, then we can be frustrated about exactly what Wendy now brought up, that issue of where is my profit and understanding what profit is. Just one short story which really just blew my mind, and it's because people understand business. At the outset, I know I've mentioned him before, but it's because I actually sat down and interviewed him and spent some time asking questions. It's so important to spend time with other entrepreneurs, which is one of the value of the entrepreneurship program, because you're in a room with other people who are thinking just like you and have had experiences that are different. So sitting with Peter Ndwati, I asked him, okay, when you were starting Resolution Health, what was one of the main goals? And it was surprising to me that profit was not the #1 goal for him at the start of the business. He was very clear and he said, if I can gain market share, the profits will come eventually. So his ultimate goal when starting the business was not profit at that point. Now it was about how do we get people onto our platform, which will then transfer into a profit later on. And you can see this in other big businesses around the world, where you think about businesses like Facebook. For many years, profit was not an issue. It was about building market. How many eyeballs can we get? And then later on is the monetization came through. And so they got investment even before they were profitable. The next one, if you think about companies like Amazon, who barely post any profits, because what they're looking for again is to grab hold of the market and be able to manage it. But we many times are just thinking profit, profit, profit. Let's discuss it and begin to see as we go along, okay? So what is profit? So profit is the financial benefit realized when revenue generated from a business activity exceeds the expenses, that is the costs and taxes involved in sustaining the activity in question. Any profits earned funnel back to the business owner who do what? Who choose to either pocket the cash or reinvest it back into the business. Profit is calculated as total revenue less total expenses, which is called net profit. Ooh-wee. Now this one, I know we're going to have many stories, but I want to just give a very simple example that will work. If it costs me, let's say Kenya shillings, oops, where are we? Kenya shillings, 200 to make a chair. Okay, so the cost of the chair itself, the materials used, the plastic, the metal, etc. It costs me to make that chair, and I'll pay the artisan, because me, I'm not an artisan, I can't build anything. Excuse me, with my hands. So I'll pay that guy for one chair. That is all the cost for making the chair are in here. If I sell the chair at Kenya shillings 300, this is not called profit. This is called the term gross profit, because we have catered only for direct costs. Okay. But what else is there that has not been catered for so far? There was rent for where that thing was being made, electricity. I don't know why this thing. There was water, maybe. What else goes into there? Me. I got this guy into the room. I probably got a design for him. I probably was involved in the sales and marketing. Yes. Indirect costs. And when I cater for that now, the gross profit, if I sell it, sorry, I'm cheating people here. Sold at 300, gross profit then is Kenya shillings, what? 100. But based on this, as you can see, there are other costs that have come on board that you didn't have before that point. And it can't be catered for as a direct cost, but you have to put it as part of the whole thing. So if you incorporate as that just one chair and the time that was spent on it, the profit now, which is called net profit, may be lowered. I'm just giving as an example. So the net profit maybe is 20 shillings. Because out of that 100 you've paid for electricity, etc., net profit, yes? My typing skills have failed me. Net profit. And this now, again, will be subject to tax, etc. in business. This is the one that I was saying just a few minutes ago. Here's the thing. Many of us are calculating our costs over here, especially consultants. When it is you, the one who's producing the stuff, you're the one who is the value in that business, our focus is over here, and we forget that a business also has what we have here, indirect costs, so that we begin to understand what is this net profit that a business will have. That's what we're looking for. And if those are the businesses that can be able to cater for net profits are the ones that are now really what we are calling viable along the way. So my profit, as I said, dividend distributed to shareholders at the end of the year, that a portion of the net profit that we have. You must wait until the end of the year to declare that dividend. This is not, when you're talking about if this is how I'm living, how I'm surviving, it's not a sustainable way, especially at the beginning, because if the business is your source of income, you can't be waiting until the end of the year. Once you have built the equity that you have, the business is big enough, the profits are large enough, maybe then, but at the starting point, it's not sustainable because you're looking for cash to sustain you. However, if I have other income streams, then owning a profitable business that pays me dividends at the end of the year is a great asset. So let's keep that in mind when we talk about our profit. Let's now discuss my wage, my salary. If you are involved in the day-to-day production of value through products or services, then you must be compensated for your time through a salary or a wage. You must. Otherwise, that business then is not profitable. Because it's like saying, for some reason, if we go back to that example that I put up on the screen, it's like you're saying there's a cost somewhere in here that for some reason it's free. Maybe we remove me, you know, and say, I don't want me anymore. If I don't cater for that, then the profit, is the business really profitable? Is the question. Because if you were to add yourself there and add the cost of the work that you're doing, you removed yourself, would the business still make this 20 shillings? If it wouldn't, is the whole business profitable or not? That's a good question. And I hope we're going to answer it together. So let's talk about this a little bit, because I know this is something that has come up so often. And I put this here because sometimes people say, I'm not directly involved. Yes, it includes managing the team, which is often some of the hardest work, because you're the one thinking strategy, you're the one planning, you're the one putting together the right team. It is value. And as I said, in most organizations, it's the managerial executive team that get paid the most because they add the greatest value to the company. Management is a key role into business functions, and business cannot run without management. And the last one is sale of shares. If you sell a part or the whole of the business, what the money that you receive is there. So here's the thing. And another frustration that I've had with entrepreneurs coming to us and talking about it in our class, I'm looking for an investor, but no one wants to invest in my business. Why? Because investors are looking for a profitable business to invest in. And the business is not profitable if one of the main employees, the CEO, the entrepreneur, is not being paid. Because I, as the investor, I'm looking and saying, if I put my money in here and we want to hire someone else to do the work you're doing, or if you take off, you decide that you don't want to run this business anymore, how am I going to continue to benefit from it? It may not be profitable if you cannot account for all the costs. Investors simply look at the books to see if the company is worth buying. They are looking at how to grow the business and eventually sell it at a higher price. Most investors are doing that. That's venture capital and equity. They have that private equity. They have the exit in mind. And you have to be ready to help them in that same space. I know people are asking, how do I know how much to pay myself? We'll discuss it along the way. Let me not get ahead of myself. We'll get there just now, and I'm going to explain how we do it. Okay. I want to propose to you, and we talk about this in the program, that entrepreneurs run one of three types of businesses. We've tried to make it as simple as possible so that you begin to get the principle of which business am I in, and therefore how do I make money from it. And it's not the industry, it is the internal structure that generates value, okay? The first one is the consultant type business. The second one is what we're calling the single business unit, and I'll break them down. And the third is what we're calling the high growth, high capital startup, okay? I'll break all of them down, so don't worry, you've not missed anything yet. So the first one is called the consultant. In this business, you are the sole factor of production. All the value of the business is in you. Even if you have staff members, they are simply there for support, okay? Good examples are artists like musicians, you know, actors, visual artists, photographers, landscape. If I am the photographer, I'm the brand. People come to me because they want me to take their photo. Even if I have an assistant who took the phone call, I'm still the one who bringing the value. Whether the assistant is there or not, there's profit there. So I'm the value. Professionals, lawyers, doctors. There's a friend of mine who's a doctor. She runs a clinic. I assure you, I do not go to that clinic to see the receptionist. I don't go to that clinic to see the nurse who will help me there. I go to that clinic to see the doctor. And so even if those other two show up to work, there's no value that they're bringing as far as the customer is concerned. Experts like coaches, trainers, etc. Again, you are the value, and that's what you offer into the world. A good example is Waithaka Ndwati, our founder. When she started doing this business called Centonomy, she was the value. And so she would have to go and do the training herself, wherever she was going. So you usually do, and this is how it is, you do contractual work, and so you try and cover your costs with every contract and make some significant markup, which is what we called earlier on your gross profit. You essentially earn a wage, because a wage is like an hourly rate. It's for your time. It's a direct exchange for your time that you're in this space, okay? What is the risk of being in a consultant business is that everything depends on you. Remove you from the business, there is no business. You are the business. Now, is it possible to be very successful as a consultant? Yes, it is. However, the thing is, because everything depends on you, you have to be able to bring in an extremely high income to achieve most likely the life goals that you have. You are like, as a consultant, you have the same problems that an employee like myself working here at Centonomy may have. What does that mean? Let me explain. If I'm a consultant, all the value is in me. Like I used to be a photographer. I'm the one who shows up and takes the photographs. I can't do it unless I have someone else involved in the team. If all the value is in me, then I need to mitigate against the risk that I am creating in my own company. What does that mean? You heard it, and some people were saying, you heard it at the very beginning, where you hear someone say, okay, good, but I need to even have a side hustle. Isn't that the same advice we give employees? But now it's your own business. So you have your own business and you want to mitigate, so you might want to have a side hustle, another stream of income. However, most of the time, again, this still depends on you. So like artists, what they'll do is they'll try and have multiple streams of income. So I have skizzer tunes over here, I have an album, I have rights over here, brand ambassadorship, etc. Maybe it's professionals. So instead of just being a speaker, you write books so that you have another stream of income. You can be a trainer and you can find great, great success. But that business is it's only on you. And so if you don't work, there's no income, there's no cash. All these things are still you as you go along. The second way to mitigate against that risk, and this is what I'm trying to convince you today, is to turn that consultant business into what we call here at Centonomy the single business unit that doesn't only depend on you. So this is the second type of business which I'll be describing. Rather than being a consultant, form a consulting firm. So I have a couple of examples, guys who've been through our program. I'm not sure how many of you are familiar with this photographer. He's very famous here in Kenya. He's called Ben Kiruthi. Ben Kiruthi, he shocked us. This was what, 2 years ago, so his prices must have gone up. But 2 years ago, he came and he was speaking at one of our events after doing the class, and he was just explaining to people that for him as a photographer, if you want him to do your wedding, his price is 500,000 shillings for a wedding, and he only does photography. He doesn't do video and other things. So for many people in this country, 500,000 shillings is the entire wedding budget. But for him, because he has built such a brand, that's what it is. But Ben, and this is his wisdom, he realized the number of weddings he can do at that in a year are very limited. If he misses out an opportunity, it's limited. So he was saying, how do I then build sustainability? What if I trained other photographers, other artists who are like me, to do the same thing that I'm doing, but at normal market rates? Could we form a business there? And he did. And what happens is he separated his own brand from that business, and that business runs and he earns money from it, whether he shows up or not. But if you want Ben Kiruthi, he does it. Another one is David Mashara. Is also an entrepreneur and a photographer who's been through our class. David Mashara opened photo studios, and exactly the same thing. So he's got photographers in his studios. Hardly will you find him there. He does his niche work. He was a photographer for the White House when Obama came to Kenya. He was the official photographer along the way. And he was just saying those kind of things opened up doors, but what they did was build his brand, which he could now grow. The best example I think that we have recently is you know, this group called Sauti Sol. They began to realize as artists, if we don't have a hit single, if we don't go and perform, if there's no album that we're doing, man, you quickly go out of business. So they said, what do we do? Rather than just being Sauti Sol, let's form a business, which is the recording label Soul Generation, which now is producing artists, that is producing a profit, which they are benefiting from, not just their own brand. So they're still building the brand Sauti Sol, but they also have another one. And what I'm trying to encourage you is this. Can we begin to move away from this consultant space? Why? Because you can make a lot of money, and you know many of them who do so. You think of, let's say, a big international brand. I'm sure many of you have heard of a gentleman called Tony Robbins. Tony Robbins. He's a world-renowned author, a great coach, and really helps people to understand those things. But Tony Robbins is the value in his business. He does events, he does speaking engagements, he writes books. But the good thing about him is that he's written books that have gone global. And the revenue from that was enough for him to have cash that he doesn't need anything else. How many other consultants can be able to get to that level? I don't know. I don't know about you, but I think it's possible as a consulting firm to generate enough revenue for you to be growing. The last one, for those who decide that I'm going to stay as a consultant and be eating the margin, you know, on each consultancy, the margin on the book that I'm going to write, get the revenue from the artistic work that I'm going to do, my rights from that artistic work, then you have the same problem that a highly paid employee has, which is you have cash coming to you, but you want to put it into income earning assets. Okay, so put your money, once you've sold, put your money into real estate, into the stock market, into other people's businesses, which are also earning an income, putting it into government bonds, etc. And if that is who you are, then you now need to be in the Centonomy 101 program immediately, because that's where you learn about how to invest your own cash into other people's, into other investments, not your own business. That way, as you make a lot of money, you're ensuring that money is working for you. But you're not building what we are calling the single business unit, which I'm really trying to encourage all of us to make a choice to do. Because the single business unit is the one that is functional by itself, and you're building an asset. This kind of business, as I said, is not an asset because it is not generating income without you. It is also not transferable. So if you're a consultant, you cannot sell shares in your business. No. Most investors will not come and touch that business because it's like I'm buying a piece of you. What happens if you decide you're not going to work there anymore? I'm in trouble. So as an investor, I'm looking for businesses which have the potential to continuously generate revenue forever, so long as there are customers along the way. And if you are the core of the business, it'll be very hard to find investors in what you're doing. I want to make sure that is the consultant type business clear? Is there any question on what it is that a consultant type business is? Any question on that? Is it clear? If it is clear, give me a thumbs up or a yes. If it is not, you can raise your hand so that I can answer your question. So the consultant type business, you are the value in your business. You are the one who offers, like I'm the doctor. Thank you so much, Simon. At least I know I have somebody with me along the way. I'm the doctor, people come to see me. Therefore, I need to make a lot of money and invest that money into income earning assets like real estate, other people's businesses, other things, so that that money eventually comes back to me. But my business cannot grow without me. Now, let's talk about what I'm hoping to convince you all to start doing, which is to build what we are calling the single business unit. Thanks, guys. I can see those responses. Let's talk. In a single business unit, this is a business, oops, sorry, my screen is there, where I am one of the factors, I may be one of the factors of production. I work in the business to generate revenue, have a direct role or even an indirect role. You know, there are some people who just put money into a business, like I'm a shareholder essentially in that business, a direct. But the key difference here is this. I am not the sole factor of production or value in the business like a single consultant. I'm not. I may have other roles, you know, things like see somebody's mic is there. Good. I may have hands-on production. Maybe I'm an artist. I love to do the work. I might even be a consultant. I might be a lawyer in that business, etc., etc. I may be management. I may have marketing. But each one of those roles can work whether I'm there or not. So I know without my input, not myself, but the role that is there. There is a role of a manager. Somebody's mic keeps coming on. Mike, just help me with that if you don't mind, yeah? Sure. The business would not function as it should. However, I can be replaced. And this is the key. Now, does that mean from the very first day of the business running that this is going to be possible? Not necessarily, but you want to build so that each role is replaceable. It is clearly defined so someone else can come in. This is the way now you can be able to look at other businesses and see that function. If you look at a big business, a good example in East Africa is Safaricom. We had Michael Joseph, then we had the late Bob Collymore, then we had Michael Joseph come back, and now Peter Ndegwa is there now. So we can understand the Safaricom functions so long as they have a role called the CEO. They have a role called the marketing director. They have a role called this. And whoever comes into that role, so long as they're functioning well, the entire organization will continue to function. That is what we're calling a single business unit. Again, question is, how do I make money in this scenario? Well, we recommend, as we said earlier, you pay yourself what? A salary. Now, there was a question on how. So you can decide what salary you would like or need to earn to live. You can decide. This will then affect the amount of business you would need to generate to sustain that income at the stage of business that you're in. Look, you have to be realistic, but I don't want you to be limited by thought. I'm going to spend a bit of time on this just now because I know this is a core question. But if we get this in our mindset, it's going to make a huge difference for us along the way. The second way, don't worry, I'm going to spend some time here. The second way is that you could benchmark with other businesses in the same industry and of the similar size. It's useful to do so, same industry and similar size if there's any, because let us just be honest. Yeah, I wish we could benchmark Waithaka, I mean Centonomy with KCB, for example, and say, you know, because, you know, Oigara, I think, was it last year, he did 150 million shillings as the CEO. I wish Centonomy could benchmark with that, but as you can tell, it does not make sense to benchmark the CEO role of Centonomy Limited yet, today. In future, we shall see, with a company like KCB Bank, which is across East Africa. So that doesn't make sense. So you're looking for businesses that are around the same size and the kind of work that's being done and benchmark along that way. That's a simple tool to use. But I want to begin to challenge some of the thinking around that. So I said you can decide. And when you decide, it will affect certain things within your business. I want to give an example. Are people having a problem with the screen? Mike, can you see it clearly? I'm being told resolution might be an issue.
Yes, I can see it clearly, but now you've stopped sharing.
I have stopped here. I wanted to click off the optimize for video because that I had pressed earlier. It's clear, okay. Huh? Good. I just saw someone saying, yeah,
it's clear.
So I'm wondering, I saw something there. So it's not on my end. So look. Okay, maybe there was an issue at that point. Let's give an example of what I mean by you can decide. You can decide. Let's go back to our carpentry business over here. Let me just delete this so that we can see clearly. Okay. Now, I am a carpenter. I own a carpentry business. And I'm saying I want to decide how much I should be earning at this point. Now, guys, look, you can say, you know, you've just started the business, you're selling 2 chairs a day. You can decide and say, I want to be earning 1 million shillings a month. That's okay. But we also have to be realistic, okay? Maybe it's not yet, but hopefully in good time, we'll be able to get there. And that's what I want to begin to talk about. The choice that you make on how much you want to earn, plus all the other costs, has an effect on the business. So let's say we say you want a salary of a certain amount. Let's be real, okay? Let's be real. And that salary is supposed to take care of your life. I want to make a good recommendation. There's an excellent, what would you call, learning videos, vlogs. Look for a company called SlideBean on YouTube. This guy does some excellent work for entrepreneurs, just to begin to give you an idea. So this is a global business that they have, an online business. They sell like how you can put together slides and presentations. They have a special software for that. And he gives a lot of history of how he's built his business and what they're going through. And when they were starting out their business, they agreed as directors, but they were also workers in the business, the 3 of them. They were the main employees. They agreed on a simple salary for everybody, and that's where we all begin. And that would grow as the company begins to build revenue over time. But here's the thing. So if I said in this organization, so you can check them out, SlideBean, I really enjoy their content and learn a lot from them. If I decide that I want my salary to be, where is this? There we go. Let's say Kenya shillings 50,000. Okay. Monthly. Okay. What happens at this point? This 50,000 now becomes a part of my indirect costs right here. Sorry for my poor drawing, but it goes into here. And if this business is to continue to remain profitable, then if I increase my indirect costs, then what happens is I will have to then increase the number of chairs stroke products we sell. So the choice that I have made to say I want to make 50,000 shillings monthly, that's the choice, will affect and say I need to therefore increase the number of chairs and products that we sell so that the revenue that we make, the revenue, that gross revenue that we're talking about, is enough so that the gross profit can cover all the indirect costs and we are still profitable at the end of the month. By deciding and saying that the income that I need for my life, and that's a very powerful thing, and saying, look, this business needs to pay me enough to live my life. And if 50,000 is what this business needs to pay me, as an example, shillings, then you work backwards and say, how many chairs then would I need to do? So it affects the number of chairs that need to be sold and the cost of each chair. You see the decision that of each product. By making that decision and saying, this is what I need to do, then you go back to the market and be able to say, hey, okay, if this is what I need to do, then I need to sell this number of chairs at 300 bob. Wow, okay, that number is very high. But what if I was able to change this 300 bob to say 400 or 500, then I would need to sell less chairs to generate the same amount of revenue, and that revenue is able to cover both the direct and indirect costs. By making this decision, that's what you have done. And even if, and here's the key to this, guys, even if you have benchmarked with other organizations along the way and said, this is what other organizations are paying at this level, that decision just doesn't mean that the company will immediately be able to generate the revenue that's required. You have now just input a certain amount, and let's say the benchmark is maybe 100,000 for the work that you're doing. Then you then have to go into the mechanics of the business and say, I need to sell a certain number of chairs in order for the business to remain profitable. That is what I must do. And that, my friends, is what a business is. When you're able to get your head around this, that is the key. Because when you understand who you are and how you make money from that business, it begins to affect all the decisions that you have. So watch this, and the other modules that we cover in the entrepreneur program and why they're important is then you will say, good, at 300, I would have to sell maybe, I don't know, a few thousand chairs. That's not possible, at least maybe by my business. From the customers that we have, from the kind of people, it's too many. Even the production becomes hard and the costs just go higher. So what if we adjusted the cost? We made them slightly better quality, adjusted the cost upwards so that the revenue increases. Good. But now we are selling chairs at, instead of 300, we are selling them maybe at 500 or 1,000 bob. Why does marketing become important? And we spend 2 classes on marketing in the entrepreneurship program is because then your role as the organization is not only to produce the chair, but also to be able to market that chair to the client who will buy it at 500 or 1,000 bob. And the skill set of finding and identifying that client is what you have to do from marketing. But look where the impetus came from. It came from an internal target, something that you have decided for yourself, which all of these are decisions, whether it's benchmark or simply a personal decision that has an effect on the way the business is supposed to be run. We have to get this in our minds. And we really have to get it so clear to us along the way. And the thing is this. We will not always be able to start off with the salary that you want. But if you are doing work in the organization, that work needs to be catered for as a cost, because without that work, the business would not be able to function. Therefore, by not catering for it, the business may not be profitable. So how do I make money? We continue to talk about, so the total cost will also help you determine the targets. That's what I was just trying to explain there. And I'm telling you, those targets really, really help. Let me just quickly ask those who are in business, help me out in the chat box if you already own a business. Were you a consideration when you were putting together the business targets for the year? That's number one. And number two, did you have business, if you're in business, did you have business targets, revenue targets for the year? Oh boy, we need to talk. How are you doing?
Hey, Waithaka.
How is Sprouts doing?
Tuko salama.
Thank God for that. Are kids still coming to get their hair done?
It's been a tough few months, but I think parents are not tired.
Yeah, we are. Let me just be honest.
So we're starting to see some folk who haven't been since Jan.
So how do you consider yourself when planning business targets? Just give us an example.
One, easy, my lifestyle.
Please say that again loudly.
My lifestyle. Poverty is not my portion.
Yes, you have decided this is what I need. Absolutely. And by saying what I need, what happened to the business from that? Just draw a line from my lifestyle requires this amount.
So let's say my lifestyle requires, I don't know, X amount.
Yes.
I know that to get...
Stop being shy. Let's say 500,000 shillings a month. Good.
So to get to 500K,
yes,
I know that we need to make, considering my rent, the salaries, I've paid electricity, I've paid water, and I've bought our products.
Yes.
We need to be at least triple that 500, just even the bare minimum.
Yes. So you can work backwards and begin to say, I want to get for myself as a cost, this is it. Then you can cost for the work. Braiding costs this amount, blow dry costs this, whatever you can cost, so that you're making sure that gross margins on each of those items, you're making cash.
Yes.
But then you have to put yourself and other indirect costs into that same budget. And we talk about it. We have 4 classes on money in the entrepreneurship program where you'll be able to understand all these principles clearly. But you put those costs in and work backwards and say, therefore, we need how many clients for that to work out.
Yes.
And then once you say, I need, let's say, 20 clients per day, every day for the year, how does that affect your marketing plan?
So what we do is we then try and achieve bookings for the day, so that we know for today, if we need to make 20K, we need to have at least secured 20 bookings.
Very good.
Each stylist has to have at least have done 5 jobs for the day. So each job average cost for each job, each client will spend about 2,000. So you multiply how many stylists you have by that 2,000, you get your end of day target times now 30 days or whatever.
And here's my question, Wabui. If you are looking for 20 clients a day, do all of them show up?
No, not necessarily. They don't. Sometimes
so if your target is 20, what is the likelihood that you will make a loss that day in terms of your projection?
between 50 to 60%, at least 50% will come
through. The thing. So you don't look for 20 clients. If 20 is your break-even point, and we'll talk about break-even, you look for 30, 40, you look for 50,
yes,
so that whatever you're always canceling that out. And this is what we're talking about. So number one, you said is your lifestyle. What else did you consider?
Wait, remind me the question. I'm lost.
The question was about in business targets. What are the other things that you considered other than yourself? And thank God that you considered yourself.
I also considered obviously the targets of the stylists themselves. They also have you know, an earning that they want to earn at the end of the day.
Right. That's right. So like in your case, they have commissions, is that right?
So they earn on commission, yes. And I always tell them, look, if you give me 300K, you're taking home 40% of that.
That's right.
So they realize that, you know, the sky is the limit for them.
That's right. So by combining those two forces, which is yourself and the value of your people on your team as well, you're working towards saying, we must achieve certain goals. And if you are not part of that target, so now that's first of all just your daily lifestyle, isn't it? Now we'll further as a business. Now it is to say, and I'm going to take you to this, the last part of this session, is I not only make, this is the wonderful thing about running a single business unit. You make money very many ways. Number one, you make money because you have value in that business. So daily you're running the business, you're doing whatever it is, and therefore you earn a salary. Number two, at the end of that year, the profit that comes in, who owns the business? It is you. So you have decisions at the end of the year on how much dividend to pay yourself or not. And so therefore, you're not only working for that monthly target so that you take home the cash, but you're also looking at the profitability of the business at the end of the year, the overall profit, because from that you also eat again.
Absolutely.
And the final one is that if you build such a powerful brand that an investor will come sniffing around, you know, there's some people who don't want to start a business, they just want to benefit from it.
I'm looking for them. Where are they?
They exist, let me tell you. There's more money for investment than you can believe. The issue is it the right investment? As I said, I gave an example of Nairobi Java House. They received an investment, Wamboi, of 13 billion Kenya shillings. And that was just one of the investments of that firm.
Yeah.
How much of that would you want a piece of? Even if they gave you 1 billion, I'm sure you'd be quite excited.
We're very okay.
You'd be happy. You see what I'm saying? Okay. And so the money is there. We just need to build businesses that are attractive for investors. What is it that you're doing within that business that will tell an investor, look, I want this? And we have a whole section, it's called Raising Capital. That section is trained by one of our partners. It's called Horizon Africa. These are guys who raise capital and do this business. I think they if you go to their website, Horizon Africa, the business deals that they do, $50 million and above for investment in Kenya. So it is, how do you build an attractive business for these guys? Thanks so much, Aboy. I appreciate that.
Asante sana, Waithaka.
So we got ahead of ourselves in this. We must begin to do that and say, what is it that you want? So your dream and ambition, should drive you more than simply the potential income. You have to have that dream of what you want to achieve. And therefore, if you have that dream of what you want to achieve, you work backwards and say, what does the company need to do to generate that amount that you're going to go for? So we have to account for these in the projections of the costs and revenue, the income statement, which we go through a lot through the program, formerly your profit and loss. And this is the tool that we use to capture the dream. What I've been drawing on that piece of that whiteboard is a very simple profit and loss structure where you know the costs that are direct costs that are coming in, you know indirect costs, you know your taxes and other obligations, and at the bottom there you have captured your profit at the end. By doing so, you can input numbers that will help you along the way. So how do I make money is also on dividends. We talked about that at the end of the year. And they can be significant. Just thinking about, depending on the business the returns can be better than other investments like real estate. So like if you're in real estate and you're renting, you know that within Nairobi, between 4 and 6% is the annual return that you're getting from the investment. Whereas for many businesses, that profitability can be significantly higher. That's why I'm so excited to have you guys thinking about starting a business. And the third part is to sell your shares. And this is where you begin to see, you know, that explosion of wealth, where somebody was, you know, you just knew them, then suddenly they have houses everywhere and all those kind of things. This is now the part where the business itself often takes off. So private equity, venture capital, they may want to buy and grow your business to sell later. That's one of them. You may also list on the stock exchange, which is a really exciting thing. We've not had a lot of companies listing on the stock exchange, but the opportunities are there, and you'll be surprised the size of businesses and revenue of businesses that is required to list on the stock exchange. You'll be very surprised. Many of the businesses that we're talking about here, you can be able to do so. Often why people don't do that is because sometimes there are better deals in private equity. So many businesses are receiving funds. They are. It's just maybe you're not hearing about it as publicly because people want to buy businesses and, you know, keep them for themselves, not necessarily for everybody, but that's another way to do it. I want to make sure, are there any questions so far, especially on what we have talked about? The single business unit this is where business happens. You have a viable business that is growing, that is generating revenue, that is paying you, that is giving you a profit at the end of the year and building its value, and that is attractive for investors. This is where that difference happens. I have a question though for some of us along the way, just so that I make sure people are still awake. Can someone just raise your hand if you don't mind and tell me, what is break-even point? Break-even point. Anyone want to give it a try? Just raise your hand, or let me disturb. We've had too many ladies talking. Where are the gentlemen? Where are the gentlemen? Let me find somebody. James, Kenywa. Oh, go ahead, James. Tell me what break-even is. James Kenywa, are you there? He has disappeared. I saw someone else. There is also, no, James is there. Hi, James Kenywa, are you there? Switch on your mic. Okay. Since you have decided not to, Hilda, go ahead. What is break-even point?
Break-even point is when a business reaches a point where it makes money that they had invested in a project. Let's say you invested 100,000, then within a certain period you make back the 100,000. That is a break-even point.
Okay, interesting. Anyone want to help Hilda? Thank you so much, Hilda, for trying. I appreciate that. This is so interesting. I always find it so interesting when I get that response. Rachel, give it a try. Hi, Rachel M.
Hi, Waithaka.
Do you agree with Hilda?
Oops. I had a different idea of break-even. I could be wrong, I'm not sure.
Go ahead.
But I think break-even is when you are no longer making a profit because your total, so the revenue that you make, the total revenue is the same as whatever you're spending, so your expenses. So you're not making any profit.
Yes. But you're also not making any loss.
Yeah.
Break-even point. And it's amazing to me, but for many entrepreneurs, the terminologies also become a little bit problematic along the way because we're looking for this thing, the return on investments, that at the point at which your investment, you are able to recoup the initial amount that you put in. Let's say you invested 100,000, as you said, and that 100,000 comes back to you, that is not break-even point. In business, break-even point, and this is what we must begin to understand, is the point at which a business, the costs of that business match exactly the revenue of that business. At that point, there is no profit, and also there is no loss. It's a very useful tool in business, because once you get to that point, it means that this essentially is a going concern, that the business can generate revenue. And anything above that, anything that goes beyond that point, above it, is profit. So up until that point, the business is not profitable. And this is something that you can look for on a monthly or even a yearly basis, where you're looking. That is a key part of business. Let me explain. Whew, thank you so much, Hilda, because don't worry, even accountants, we have dealt with accountants who have come back and said that the break-even point is the point at which you recoup your initial investment. It is not. A good business is what we have called a profitable business, which means that they are making more money than they are spending. So there is a gap between the income, which in a business you call revenue, and the expenses, and that gap is what we call profit. But the point at which there's no profit or loss is called the break-even. And once you've gotten to that point, the business is essentially self-perpetuating. And that is key. If you're looking for that point, you're missing a big part of what is so valuable in the business. Let me help you. As I said earlier on, when you look at the wealthiest people in this world, the wealthiest people, they are mostly entrepreneurs. Why? Because their wealth is not just the cash that they have, but the value that they have in the businesses that they own. So a lot of their wealth is not cash. It is in land somewhere, it is in buildings, real estate, and property, but it is also a lot of it as value in the business that they own. Jeff Bezos, Bill Gates are on the top level of entrepreneurs in the world in terms of net worth because their value is held in the shares that they hold. Here's the thing. If I invest 100,000 shillings into a business, I have value of 100,000 based on what the market says of 100,000 shillings in that business. Let me make it simpler than that. If I'm in a transport business and I buy a motorcycle for transport, I spent 70,000 shillings to buy that motorcycle so that it can be able to generate. That 70,000 doesn't disappear. It is there, maybe it's depreciating as an asset, but that asset is also generating value as well. So the company holds value. And a big part of that is the benefit of being an entrepreneur, because you have the value in the business. Let me quickly this might actually be a good moment to take a short break. Usually during a class, it is now, it's perfect timing. It is now 7:56 East African time. We can take a short 5-minute break and then come back. So at 8:02, I will continue. And this time I'll be explaining, for those of you who've been thinking about it, what a high growth, high capital startup is. For all those with that brilliant idea that maybe cannot be put into place without investors, this part is for you. Because there are some businesses that you can grow. You know, if you're in the hair business, you can start yourself, you do people's hair, then you hire someone else, you can build slowly like that. But think of a massive company like Tesla, which is a car manufacturing. You can't build one car in your backyard and then you need the infrastructure. This is what we call a high capital, high growth startup. I attended a panel of investors, like Lion's Den, Shark Tank, those ones.
Yeah.
There was a panel of investors, and they were just very honest. And they were saying, you know what? Even I've been rewatching also the Lion's Den. It's now on Netflix. So I finally have a chance to watch. I never got used to watch it when it was in telly. Those investors, I hope you realized, when they saw a good business, yes, they would even fight one another to get a piece of it. And do you know what I'm saying? As in, because they can see where is the potential return.
Yeah.
When looking for investors, and I hope everyone is listening to this, investors are very, very, very clear on what they want. They want a return on their investment. For them, they are saying, they are the ones, now listen to this, they are the ones who are looking at return on investment, ROI, in that they want to recoup and get a profit on top of what they're saying. So for instance, as we said, a good example, and you heard even of Good Life is happening now, they're being bought. As money is being pumped in, what they're saying is they're building the network of pharmacies, just the same way that when money was pumped into Java, it built a network of, what happens is now you have lots of Javas or lots of outlets, each one of them generating revenue, each one of them producing and giving a profit over time, each one of them increasing in value because people come there more over time. So that within that's why the investors were saying within 18 months, they wanted to have built everything and ready to sell, because in 18 months now you're saying, here, look, we now have a company which used to have 5 outlets, but now it has 50 outlets out there. Each one of them is generating this amount. As an investor now you're saying, oh, good. I didn't want to take the risk of building it to this level, but guess what? It's generating revenue. It can become part of our portfolio. We buy. And so at that point, that secondary investor gets their money. Another time investors are looking for that money to come back is when they're not involved at all. So they, I'm sorry I keep using him, but it's because that's the example I have. Peter Ndwati was just saying for Resolution Health, where when they started, there were a few people who invested small amounts of money. And the idea was, when the company begins to generate revenue, they'll get paid back at a certain level. That's all investors are looking for. So if you can prove to them that if they put their money into your business, that they'll get a higher return than they will from buying another piece of land, buying another piece of real estate, going to a government bond. So you see, the thing is, as an investor, look, let's say I have 10 million shillings I want to invest in it. I want to invest. If I go to the government bond and I give them 10 million shillings, they're promising me a return of 12% per year. Good, so that's a good benchmark. And that one is, depending even on the type of bond, it can even be tax-free, like if it's an infrastructure bond. So if I'm getting a benchmark of 12% from this thing, if I'm to take that same 10 million and put it into a business, I don't want anything less than what I could get without stress. So you can use like government bonds as a measure, or even real estate, because real estate now it's growing and you're also getting a return. When you're thinking about such things, that's what you're looking for. But listen for a little bit, Purity. I want to give you advice before you tell anybody your idea, because that is what I'm talking about here. Let's talk. In a high growth, high capital startup, this is a type of business that usually requires a lot of capital to get started. However, with a proven model, it can result in equally great returns. All right? The business is usually tech or manufacturing, where it requires that high capital. The example I love to use, and it's because it's an international example, and I know I'm speaking to people around the world. Tesla is a very small car manufacturer when you think about it. They are not as old as Mercedes or whatever. So when Elon Musk wanted to start Tesla, which is now selling cars globally, to build a factory that can produce cars requires huge amounts of capital. But what you need at that point to attract investors is a few things. The value that you bring as an entrepreneur is a specific expertise expressed in a patent or an app or a book or a system that can be legally protected. It's about the idea. However, that idea must exist in some form in order to protect it. Listen to me, and we spend a whole 3-hour section in the entrepreneurship program talking about the legal aspect, and intellectual property is a major part of that. You cannot patent or copyright an idea that is in your head. So Purity, you are 100% correct not to say what your idea is here. If you don't have a patent or a copyright on it, don't tell someone else, because I assure you in this room, there are hawks like Waithaka who are paying attention. And if they just have a little bit more money than you, they can get it started before you do and your idea is gone. So you want to have a patent or you want to have a copyright, something that is tangible that people can see and say, if we invest in this, it can make a huge difference. So even though it may be simple, like a simple prototype, so long as it shows the proof of concept, this is what is can be protected and has value. So let's use Tesla and then we'll use another example. So Tesla, what did they do? They invested in their very first car many years ago, which was a Roadster. It wasn't even their own car. What they wanted to show is that an electric car can be fun. That was their value. Because up until Tesla came on, electric cars were very boring, slow, plastic, tiny, annoying little things that nobody ever wanted to talk about and nobody wanted to purchase. I think there was a very famous one that was tested on Top Gear called a G-Wiz, and they kept blowing them up. And I mean, because they were thought of as a joke. But when Tesla took a road car, it was a Lotus car, and they're very well known for their sports cars. And they put an electric battery in that car, and they put electric systems into that car that allowed it to run and proved that an electric car can be fun. Investors looked and said, hey, here there is something. Not only is it fun, but it is environmentally friendly, and you can see that laws around the world are changing as far as fuel consumption is concerned. So all car manufacturers were being put under pressure to reduce the amount of oil being used. So it's, well, there's arguments as to whether it is or not, but it is less carbon dioxide into the air, at least from the car itself. And then it is also profitable. People were willing to buy at that level. So when he was, sorry, and I forgot the fourth part. Not only that, but Tesla now does not only manufacture the cars alone, but it has a massive, massive factory where they are producing batteries, which all other car manufacturers will need for their electric cars. So they're not just going to sell their own cars, but probably sell batteries and the charging system that they have for others to invest in. So when investors came and looked at Tesla, they saw the proof of concept. Here's the car. People love it. They're enjoying it. It's not perfect yet, and it wasn't perfect. And if you remember, there was a huge controversy when it was being tested at that time. There were even legal battles about the way it was reviewed by car reviewers. I think most famously Jeremy Clarkson of Top Gear. But he was able to prove that, hey, this car can work. If it just receives a bit more money, a little bit more time, a bigger factory so that you can benefit from economies of scale, then that can work. But you have to have the idea. The other one is most famous, another very famous one is Facebook as an example. Facebook was a website that nobody else had ever seen. It was growing in leaps and bounds. It grew on campus before anyone put any real serious money behind marketing it. It had value that when they went to investors, they were saying, look, how do we grow this thing so that we'll get to the point where everyone is using it, then we can monetize. So as investors, they were saying this thing is growing, it has great value, it has stickability. That's another word that I'm beginning to learn about, that other people want to stay versus other websites. And because they had it already in place, it was already working, it was already moving. Investors are willing to put money into it, a lot of cash, and wait for the profit many years later. Excuse me. One more example, the company called Uber, who have continued to raise funds from investors, and yet they are yet to get to that profitability point. But they have a system that nobody else wants, and their current goal is market domination, after which they begin to get that value. So Purity, I hope I've helped you. Don't tell anybody your idea yet until your idea is substance. Because when you have substance, then you can go. And if you remember, you guys, everyone who was watching Lion's Den, if you watch Shark Tank, the question investors always ask these people is, do you have a patent? Because that protects me and says, you're the only one allowed to do this for a period of time. Therefore, the likelihood of my profit, my return on investment is much higher. I hope we have gotten it. But you must have something that you can hold. So how do I make money from this scenario? Purity, listen to me carefully. If you're going to still work in this business, you need a salary. So even if investors have come on board and put money into that business, you are still a cost. And in fact, probably the most important cost of that business, because you're the one doing the development, so get a salary. So the investor will put money into the business as it is valued. That money is then used. I forgot to lock my door. And my sweetheart has just come to say hello. Hi, baby. Quickly, quickly, and then go. This is the thing about working from home. You are working on the idea, and therefore you must be paid for your time. So part of the cash that is brought in terms of investment pays your salary and the salary of all those others who are working in the business at that time. A great example, I keep going back to him. I'm telling you, I need to pay him a bit of money for this issue. We'll talk, but we've given him a lot of business as well. Mr. Peter Ndwati. I was shocked because when he was talking about his business, I asked him, when you started, what did you do? Resolution Health again? He said, when I raised capital, I didn't get into business to make less money than I was making in the corporate world. I didn't. At that time, he was at CEO level because he was at the CEO of an insurance company in East Africa. Yes, you can go now. Thank you, sweetheart. God bless you. I love you. After the break, I forgot to lock the door. So he moved from a CEO level of an insurance company to his own insurance company where he raised funds, but he did not take a salary cut. So he was still taking a salary at the level at which he was taking from that business, from his salary, from the corporate job that he was doing before. He said, I didn't get into business to make less money. And the value that I was bringing to Resolution Health was the level of a CEO of a company at that level. And so I was not going to take less money. So even the investors who were coming, they knew the cost of that business. He was a cost in that business and therefore was being paid so that you can survive to build your business. This is what we're talking about. And then the other way that you make money as well, obviously, just like the single business unit, you make money as a salary. If you are still a director in that company, you make money as dividends once they're declared, if they're declared at some point, and then at the sale of shares after on exit. So once the business has grown to a certain level, you might go to the stock exchange and offload shares there. You might bring private equity and that's where a lot of the cash is usually made. So once the business has achieved its potential, you can sell the newly valued shares. Hey, I've talked and their hands up. Eric, ask your question.
Yeah, Waithaka, my question is, when are we supposed, or rather as an entrepreneur, when are you supposed now to start taking salary from your business? Is it immediately you start your business or you give it time? Kindly clarify on that, kindly.
Eric, before you hang up, do you work in that business?
Yes.
What do you do for that business?
I manage the business.
Uh-huh. If you were to hire someone to do your job, Eric, would they do it for free? If you were to hire
they don't do it for free. The guys I work with don't do it for free. I pay them.
Very good. If you were to hire someone to do the work you are doing, would they do it for free?
No, they wouldn't. And that is why I actually decided not to hire somebody, because I know they wouldn't do it for free.
So my question is this. There is work being done in your business that is not being accounted for. I am concerned, Eric. Do you have another job somewhere?
At the moment, no. I don't have a job.
Oh my goodness, Eric. So how are you eating?
Okay. So far what we've been doing, we've been actually looking at our quarterly results, our quarterly performance. From there is now I take a portion of what we've made.
So you are eating the company's profits. I have a question.
A portion.
Wait. Eric, if you hired me to come and do your work the way you're doing, do I have the same rights to take a part of the company's profits?
No.
Why?
Because first of all, the company is not yours, and the company. Actually, the company. Okay, what I think is that you're not supposed to take a salary because, or you're not supposed to take a profit because the company has employed you.
Thank you, and it's employed me to do work. And this is the key, guys. I hope everyone is listening. If you are working, you are part of the value chain of your business. And if a part of your value chain and a key part of your value chain is not being catered for in the costs of that business, that could significantly affect the profitability of the business, which may mean that it may not be as profitable as you think. Because if it was to pay for all its costs, does that business is it still viable? And that is why we are challenging us to start, because if you don't have another way you are definitely taking money from that business, but it's just not the normal way that you usually do it in a business. A business caters for its costs before it pays off its profit. If you are doing work in a business that no one else would do for free, then it means you should be paying yourself. Now, Eric, does that mean that you can be able to pay yourself the amount that you want right now? Probably not. But the discipline of putting yourself as a cost is not just yourself, it is the role. And we talk about this in structures of your business in module 4. I'll just take you through the module shortly. In module 4, we talk about the structure of your business. When you see that the business requires a manager called Eric, it doesn't have to be Eric, it could be anyone else, could be Waithaka, whatever, but there is requirement of a manager. That manager should be paid for the work they're doing in the benefit of that business. If they are not being paid there is work that is being done that does not result in the profit and can affect the profitability of your business. Should you pay yourself? Yes. A salary? Yes. Dividends? No, because dividends you are reinvesting. Remember, you are reinvesting your profit. And that one you definitely, as you heard earlier, it's even biblical apparently. I didn't even know that. I'm going to go and read and study that. But that idea of reinvestment is true, and you even see it on the stock market, that younger companies that are trying to grow very rarely give a dividend to shareholders. But what happens is because they are growing in value, shareholders are happy because I bought a share at 5 bob, it is now 10 bob, I'm worth twice as much. Even though they didn't pay me cash, my value is there, I can be able to cash it out. So Eric and everybody else in this room, pay yourself. Why? Because if you are working there, if you're part of the value chain, paying yourself means that you're catering for the costs. And if you're not able to pay yourself enough, that begins to give you the push to say how much work do I need to do in terms of business targets? And say, for me to pay myself this amount, you had one boy saying this, for me to pay myself, I need to do what? That amount of business. So everybody's working towards that target. Eric, I hope I've answered your question.
Yes, you have.
Very good. Purity, your hand is up. Does that mean you want to ask a question or not? That is silence. Good. I want to tell you guys a bit about the program now, but it's so important that we get this element of the, if I don't know where my money is. Rehab, what is happening? You are having a moment, but I don't want you to have it by yourself. Switch on your mic, Rehab. Hi. Rehab Wainaina. Hi.
Hi, Waithaka.
What is happening?
I have never looked at it from how you've explained it.
Mm-hmm.
And it makes a lot of sense to realize that that's a huge part of cost that's not being accounted for.
Yes.
Yeah.
And so if you have been wondering why investors are not interested in your business, it's because I will look as an investor and say, hey, there is work at a CEO level in your business that is not being paid for. So if I put my money here, every quarter you'll be taking out, like Eric was saying, taking out my money from the business without it being, hey, no. I will not agree to put my money there. But if I can see there's a role, and we talk about role-based organizations when in the program, when I see that role and I can see that we have catered for that role as a cost, as an investor, I become more comfortable because I can see, hey, this person has thought about the value chain in their business, and we talk about that even as we go forward. So thank you, Rehab. Yeah, it's so important in the way that we think. This is what business is. You're either a consultant or you're in business. If you're a consultant, then you need to make a lot of money to cover your own personal costs. Now, the number of people who can do that, I don't know, there are few. Where Centonomy shifted as a company was the point at which Waithaka and Wati realized, you know what? And it came early in the business, and we thank God for that, because that revelation happened. She went to pitch. She used to be the one training, so she would pitch to corporates and go and train about personal finance. She pitched to this corporate, and she was told, okay, good, you've gotten the job, but one of the requirements of the job is that we have 2 branches. We have one in Eldoret and we have one in Nairobi, and they all have to be trained on the same day. So now look at Waithaka. I am the only trainer I have here, and there are 2 jobs. The correct response as an entrepreneur is, yes, we will do it. So she said yes without having another trainer, went home, found another guy who's been with us since then. One of our best trainers is called Isaac Keegan. Isaac, he was trained within 1 week. The content was sent. He's a lecturer at university. He was sent to Eldoret to train there while Sheke was training in Nairobi. What that revealed was this. Guess what? Where is the value in this business? It is currently housed in Waithaka. What Waithaka needed to do was unleash that value into the business. And right now, you will hardly ever see her training. In fact, you guys as entrepreneurs are the only ones who get to see her training anymore. She doesn't train anymore on personal finance. Her area of interest right now is entrepreneurs. She chooses to train entrepreneurs just like yourselves, because she's saying, that's where my passion is at the moment. That's where my interest is. That's where I'm growing at the most. And so now she's doing that, but she has unleashed the value of the business. We have over 30 trainers who are able to do this over a period of time. She has let go of the management to another character called Waithaka. And so she's busy now directing the company and doing other things like writing books that has made a huge difference. Doesn't that sound like the financial freedom that we want? This is what we're looking for. Mercy, ask your question before I tell you a bit more about the course.
My question is about sniffing investors.
What does that mean?
Like, you've managed to attract investors.
Yes.
But you don't want a shark.
What does that mean?
Sharks. Because, Okay, like the way you were saying Shark Tank, they are only interested in your business. But how do you decide this one is not a shark? As in, how do you, because of course you may have to value their business, right?
Yeah.
But how do you decide, okay, it's this one or this one or this one?
Yeah.
Is it just the money? Is it the vision that you have?
Yeah.
As in, how do you deal with investors? That's my question.
So again,
because I think some of them are sharks. Sorry.
That's true. No, I hear you. I hear you. And it's true. Yeah. Some of them are sharks. And in fact, if you studied a gentleman called Warren Buffett, his earliest investment strategy was exactly like a shark. It's really, you purchase a company to dismantle it and make a profit from its pieces. He's since changed that strategy for a long period of time. But what you're talking about is the process of how do I approach investors, and it is not just how much money are they bringing, but are they in line with your vision and your goal for that company? Do they see the end in line? Do they see your same vision, and are they willing to go along with you? So if you remember from watching the Shark Tank, from watching what is it called, this Lion's Den, it's a beautiful short version. Those discussions continue afterwards. It's not, everything doesn't happen just there in that room. There's a lot of work that goes onto it. But if someone wants to take a majority of your business without your will and do whatever they want with it, obviously that person is a shark. But if someone sees the vision and can say, you know what, I still want to leave you with the controlling interest. I want to give you money and you are the one who's going to bring the return. I'm willing to work with you and add value. Because if you remember from the Lions Den discussions, many of the entrepreneurs who are sitting down there, the Lions, they would say, I will bring value. I have a value chain. I have manufacturing, like Chandaria used to say, or Krisenanu would say, I am a marketer. So this thing will go out there. So they're not just bringing their money, they're bringing their value. Those are the kind of discussions you want to have. So when engaging an investor, it's not just about money. There are further discussions that you want to have because, as you said, right, there are sharks out there. Michael, I'm seeing some activity in the chat box. Have I missed any questions that I can answer now? Thanks, Mercy. Thanks, Eric.
You're welcome.
All right, so let me try and see if I can get the details from yes, Mike?
We start from, it's Karani.
Okay, go ahead.
Who does if the business is not making enough money to pay everyone?
That's a real issue in business. You need to figure out how to make more money. So there are tools that you can use in any business if it's not making enough money to pay people. So you might want to cut costs. That's one tool that you can use so that you increase the remainder of the revenue that is there, the profit that is there. So cutting costs is one method. But the key for most businesses at that level is increasing revenue. How do you increase the amount of money that the business is able to make? That is a key part. So your income statement, formerly your profit and loss, is one of the major tools that you use to look at and try and make those adjustments for the business to be able to achieve the goal. So you're looking at your costs and you're looking at increasing revenue, cutting costs so that you're able to pay people. And we talk about that. As I said, we have 4 classes on money in the entrepreneurship program. These are the classes that are there. Yes, Mike, another question?
Yes, I don't know if you had seen this. It's the last question again from Karani. He's asking how you divide shares of partners. If one is bringing money, the other one is bringing a skill, and the other one is bringing probably connections. How do you divide the shares?
So it is quite a process, and it's a negotiation. So there's no template. First of all, the value of the company needs to be agreed on by all parties. What is the overall value? And that takes time. You can use the income statement as a useful tool. You use also other things like brand equity. You can see the power of the brand. All those factors, the position in terms of the placement in that's right, Mercy, it's like a marriage. The placement in the market, where have they reached? And then once you have agreed on the value of the entire company, then you agree on how much have I brought to it. Here is one of the keys. Thank you for asking that question, Karani. If I have not been keeping account of the money I've put in, watch this. Even though the company cannot pay you the salary for the work you're doing today, what that is you have invested in the company your equity. The money you didn't take out because you needed to eat and survive. If somebody else was doing that work, they would need that money. The company owes you. And therefore, you can consider that as capital, or you can consider it as a debt that the company needs to pay you. So at the point at which an investor comes on board, that number is there. I have been working for this number of years and I've not taken a salary. This is how much it would have been to do the work that I'm going to do. This was my sweat equity. This is the amount of money. You don't even have to put there that I didn't take a salary. You can put it there that this was a credit. This was your investment into that business, and therefore it can be paid back as you go forward. All right? I hope I've responded to that. So it's quite a negotiation, and we talk about that, especially in the session on raising capital. How do we begin to engage with entrepreneurs? As you can see, it's module 9 here, as we go ahead. Being asked whether is the cost more relevant for existing businesses rather than those at the idea stage. I think if you are already in business, you must be here, because the success of your business already has an impact on your life. So you must be there. But if you're thinking about getting into a business, remember, it's like the example I gave at the beginning of the session, where if you enter the game and you don't even know the rules, you will be finished before you even know it. So it is important for both those at the idea stage and those who are running the business to come for this class, because it will set you up to understand the rules of business and give you the tools to get through that. Hilda, go ahead. Your hand is up. So okay, I've seen the question.
I have said the question.
I saw. Why is marketing divided into marketing and digital marketing? Simply because digital marketing is such a live sector that changes daily, not even weekly, daily, and has become so central to our system. The principles of marketing are there. We'll talk, about the four, what are they, the 4 P's, etc. They're important to understand the principles of marketing and why you want to market. How do you identify customers, customer segmentation, etc. Those are very important. But this new tool called the internet is so vast. Do you want to be on Twitter? Do you want to be on Facebook? Do you want to be on Instagram? How do they all work? Which is the direction that you want to go? We found that covering that content in the same module, it's too much information and you'll be compressed. So we separated it because digital marketing has become such an integral part of life. Right now, you are in a digital marketing segment of our program. This time that we're spending here, you came into this time for free. It is with an agenda. I want you, Hilda, to sign up for this program because I want to convince you that it's worth your time so that you get into the game knowing the rules, which will increase the probability of the success of your business. This is not for free. This is an investment. My time is a lot of, it has great value, at least to me, also to the organization. So we talk about digital marketing separately because the tools are so different and the effect of it is so different that we need to think through them differently. And I think that's what we are doing. All right, guys. So as I was saying beforehand, the program starts next week. And I know you guys were just waiting for an opportunity to hear more about it. We run the class on 2 days in a week, so you can be able to select. And obviously, we are hoping for a big class this time. As the class increases in size, we can always add another day for training. But we run it on Wednesday between 6 p.m. and 9 p.m., pretty much like what we've gone through today. You'll have a bit more time in that because we cover a lot more content. And on Saturday mornings from 9 a.m. to 12 p.m., that's East African time. This is a great time to get into the class because for you guys, you have a special offer for registration. It's only 1,200. And then for everybody during this COVID season, we have really slashed our prices, lockdown discount of 20%. So what you would have been paying pre-COVID, which was 57,000, now you're only paying 45, and it's payable in installments, 15K per month. We think that's really, for the value that you're getting, this is extremely good value. So you can pay by the M-Pesa details that are there, the pay bill number and the account. This special offer is for today. Am I right, Ruby? So register now so that you can be able to get that. The special offer for the registration of 1,200 is for today.
It's for today, yes.
Very good. So if they come to you tomorrow, they'll pay 2,200, right?
Correct.
Good. So the details, you put the account number there is first name and ENT so that we can know which program you're coming for. You can call Ruby if you need any more details on that number at the bottom of the screen, 0700 801112, or email ruby@centonomy.com. I'm sure you've already received an email from there. Any other questions now? We want you guys to register now. So I don't know if I've seen any questions coming up in the... Listen. Thank you, Ageshi. Thank you for I'm seeing all the people who have registered. For international students, if you're coming from outside the country, please do email Ruby. She'll be able to give you the best solution for payment from where you are. Do that email right now, and I'm sure she will be kind enough, even if you're not able to do it immediately from outside the country, she'll be able to help you with that discount. So Samson, I've seen your question there. Email Ruby right now and she'll be able to give you the details on how you can pay from outside the country. For different countries, there are better options along the way. Jane, I don't understand your question. If you have an idea, business, not a real one, is it best to take the class? I told you, you don't want to get into a game in which you don't understand the rules. You will not have a chance to succeed. Get in now, learn before you get there. I'm telling you, this will change the trajectory of that possible business, and maybe even make you think differently about the type of business. One of the things that we use, a tool that we train on, is the business model canvas. And it's a wonderful tool for testing the business model, not necessarily the business. Should we be selling, for instance, 1 unit, or should we license our patent to a manufacturer somewhere else there? So yes. All right. So we talk about that so that you can figure out how you get into the game. Unless there are any other questions, I am so happy. Thank you so much for your time. I'm seeing all the people who have already sent registration, Ruby. These are guys who know what they're talking about. And it's lovely. If you are choosing between this and 101, you have to do both. If you're an entrepreneur, you must do both. If you're not in business, you can do 101. But because you're in this room, I can see that you want to do, you're in the entrepreneurship program, you want to build a business, you must be in this one as well. Absolutely. But for those entrepreneurs, afterwards, they can come for 101. Ruby.
Yes.
I have talked. I've tried to market, but I've also tried to give the insight as far as the business is concerned, because if we don't get that, then we get frustrated. No one wants to invest. Yes. Why? Because I can't show them how they can get their money back. I'm busy here taking money from my business and wondering, where is my profit? But you stole it before yourself from yourself. if we get the structure, this is what we are talking about. Come on, guys. We must raise the standard of our businesses. We must. Thanks, Ruby.
Thank you so much, Waithaka. Thank you so much. And thank you so much to everybody who's attended.
All right, guys. Have a good evening. God bless you. See you in class. I won't see you next week because I train, I think, module 4, so it'll be a while since, but I'm sure you'll enjoy. Washeke will be, I believe, your first facilitator. It's always good to hear from a successful entrepreneur. See you guys. Take care.